Micron Technology just released their quarterly financial results, and they are not good, to say the least. The revenue went down by almost 50%. Net income went down from around $4.5 billion to minus $2.5 billion. That is a decline of 155%. But that's not all. Long-term debt in the last 6 months went up by a staggering 77%. So these results are really worrying, but the company decided to take some strong actions to turn things around. First of all, they announced a 10% workforce reduction a few months ago, but now they increased it to 15%. They are also cutting their expenses on the new plants and equipment by 40%. So they are really trying to reduce the costs. But why are they in this situation in the first place? Why are they losing money? Well, let's value and analyze this company to find out, and also to see, are those results a beginning of a decline for Micron, or will they create an opportunity for us as investors to buy a company that is struggling now but has a great future in front of it? First, let's take a look at individual insiders. That is an X with just 0.3% of the company owned by individual insiders. And we would like to see this number over 2%. And are individual insiders buying? That is also an X. In the last quarter, 4 insiders were selling shares worth approximately $6 million. And do super investors own this company? That is a check with 11 super investors. And some of them are my personal gurus like Monish Pobrai, Lilu, Guy Spear or Seth Klarman. So some really strong names. And are they buying right now? That is a check. In the last quarter, super investors bought over 3 million shares and sold only 10,000 shares. And one of the buyers was Monish Pobrai, who added over 2% to his investment. Return on invested capital. That is a check at 15% 10-year median returns. And we want to see this number higher than 10%, so that's a nice result. And free cash flow growth? It is an X with minus 19.5% 5-year average free cash flow growth rate. So the recent results really made a huge impact. And what do we know about net profit margin? It is an X with minus 62.6%. So they are losing money on an exceptional scale. And just a year ago, the margin was plus 29%. So what happened in that period? How can a company change so drastically? Well, when the PC and phone market slowed down, Micron found itself in a situation with a lot of inventory that just could not be sold. And it reported inventory write-downs of $1.4 billion. So what are inventory write-downs? Well, if inventory loses value, an accounting process called an inventory write-down is required to show on the financial statement that the value of the inventory is less than anticipated. And the technology is evolving in such a pace that if you don't sell it fast, it becomes obsolete. So that is why the results are so poor. They have a lot of inventory that they can't sell with a profit, and that is losing its value every day. And now let's take a look at share buyback. It is an X. In the last 10 years, they issued 3.5% extra shares. So investors are getting diluted, but very slightly. It's not something I would really worry about. And the debt? It is an X. It would take them over 8 years to to pay the long-term debt with a 5-year average free cash flow. And on the one hand, the recent free cash flow is negative, so that is really bad, and that is why we are using a 5-year average free cash flow. On the other hand, they have a lot of cash. So the long-term debt is around $12 billion, and they have $9.8 billion in cash. So it looks worse than it is, but still it is a massive debt. The dividend yield is 0.7%. So we are getting 45 cents annually per every share. And the payout ratio? That is an X. We can't really calculate what percentage of earnings they are paying to shareholders through dividends because they don't have any earnings. And if you are losing money and at the same time paying dividends, then it does not look like a healthy situation. And what about dividend growth? It is an X because they started to pay dividends in 2021, so it is just too early to tell. To value Micron, we will have to estimate its growth for the next 10 years, and we will make 3 scenarios of this growth. And because the recent free cash flow is negative, we will use a 5-year average free cash flow for this calculation. So, in the low scenario, we will estimate a growth of 10% and then 12%. In the medium, 13% and 15%. And in the high scenario, 17% for the first 5 years and then 18%. Now, why did I choose such growth rates? Well, if we look at the last 10 years, we see a growth in revenue by 14.1%. And 10-year compound annual growth rate for the free cash flow at the end of 2022 was 20.5%. So, if we assume that Micron will get through its problems and it gets back to growing, well, just a little bit slower than in the past, we get these estimates. So, with such growth rates, the intrinsic value in the low scenario is $29, in the medium $37, and in the high scenario $48. But we have to always add a margin of safety to those prices. I use a 30% one, and with such a margin we get $20 in the low scenario, in the medium $26, and in the high one $34. And the current price is around $63. So it is all in the red. This company looks expensive at the current time. Micron proved through the years that it was a great company, and it may still be a great company in the future. But right now it is in some serious trouble. Probably just for a short time, but who knows? So I would just watch the price, and if it goes lower in a meaningful way, then I would dig deeper into this company to really understand the business, and only then decide which story I believe in. Are the recent results a sign of Micron starting to lose its ground? Or will it emerge from those headwinds much stronger and more competitive? Thanks for watching, and bye-bye.